Well, hello there, all you market traders and profit takers. This is your Forex University professor at yourforexuniversity.com. We're going to take a review and a forecast of the week ending October the 3rd, 2014. We're going to do things just a little different this week because we want to go through some of these trades and see how they panned out on the chart, because this week was the week that we started seeing some change in the climate on the 4-hour chart. Let's start out. We're going to start over here on the Aussie. I'm going to try and do this as fast as I can because I've got a lot of coverage that has to take place. As you can see here on the Aussie, the weekly, it's just continuing as we said last week. It's bearish, and that's just all it is. But however, you take a look here at this bottom here at the beginning of the year, and now we're here. We're back revisiting, and it's right at a GAN level. This GAN level here at 86.59. That's a potential for what's called a double bottom, which potentially can create a move back to the upside, at least to the 50% or the any of the Fibonacci retracement numbers. So there's potential, despite what we see with all of this heavy downward movement in the last 4 weeks. There's a slight potential for things to try and bounce back towards the upside, if nothing else, to the next GAN level, or even at this crossing of these two trend lines. It's not definite. There's nothing to say that it's absolutely must happen, but it is a good possibility. We could even create what's called a cup and handle pattern, and we could start to see consolidation maybe set in at this point and meander its way across till the end of the year. But based on some of the fundamental things, we could just see the market just continue to fall. So we're going to keep our eye on that, look at the quick view levels to help us determine how that goes. And of course, we're going to keep our eye on the 4-hour chart, see how the 4-hour chart plays out, and see what happens. See, here's the week that we just had in the 4-hour. This is all that candle from the weekly chart that took place. This is what happened inside of that candle. We had a moment, and let me show you real quickly. That kind of got us there for a second. We weren't. Take a look at the way the trend line came through. All right, here we didn't close above it, so we have to readjust it to here. And this was the moment that we saw for the first time in a few weeks, a move back against the downside, where we closed above the trend line and breached the high. And for a moment, it looked like things were going to go bullish. And of course, at that moment that we did get this break, we needed to put in the trend line to the upside and then readjusted it on this candle, because that's the lower bottom. And now we see, if you zoom in a little bit, you'll see how quickly and how short that move to the upside was, because now you have a close below the trend line where the low has been breached by this candle, and now we're back to the downside. So for these few 1 day or so, basically we had a move to the upside for 1 day on the Aussie, going against the grain. And then we finished out. This, by the way, was Thursday, and then here on Friday it worked its way back to the downside. And what you might want to consider is looking at this. Now, I haven't done this yet, but now I'm just looking at this. That's probably about a 25, at best a 382 retracement. Let's take put a Fibonacci up against this really quick here and see what we get. Yeah, almost made it to the 382 retracement. And if we look into our quick view, we would see where we had on that day a lot of, matter of fact, I'll see if I can't find it for you. Let me take a look here. For the sake of time, I'm gonna pause so that I can find it. I don't want to take obviously, as everyone knows, we do not script these videos. Okay, there we go. We've got, this was Thursday, the day that we switched gears here. And here, you could see here where these are our resistance levels, these two green lines right here. And as you notice how the price kind of stayed right there, obeyed it, okay? And go to the Friday. Is this Friday? Nope, that's the wrong way. That was the day before. Here's the Friday. Notice how we fell back down afterward. Now let's compare this 15-minute chart to our 4-hour chart, and you can see here this was our barrier right here where we broke with the close below it right there. Okay, and of course that's one of our scalping techniques, is when we break that barrier and go into this void like right here, you want to start looking at the short for the momentum to carry you through, which is exactly what happened. And if you go back to your 4-hour chart, you can see what that looks like in a longer term time period right here. As we closed, broke the high, went to this high here, what was that, 88.05, and then you switch back and you can see, come on, you can see the 88.05 for the second right in here. 88.06 was the day before, and then here 88.05 was the high, and falling below the barrier, and we fell back down. So in other words, what I'm trying to just show you here real quickly is how we had one day where it was bullish, and then the next day we got the signal to continue back to our bearishness. So this was nothing more than a correction. Okay, let's move over here. A matter of fact, for the sake of time, I'm going to run over to some of our errors, some of the places where we took a hit. Like, for example, on the yen. For the week, we lost 98 pips on the yen. Of course, obviously, that doesn't make you too upset when you've had a total of 521 pips for the entire week. But even still, it was due to some error on our part as human beings. In retrospect, looking back on it here, we took a short on the yen. And I really want to show you this because it's one of the things that happens every now and then, and it's good to be prepared to know that it can happen to the best of us. So let's take a look at the 15-minute chart real quick. I want to show you something. This is where it hit us the hardest, because we did short the yen on this Friday, and we did get a signal on our 4-hour chart for it to work its way back long. Unfortunately, right here. One reason why we didn't do it was because this particular trend was so steep and so hard. When it broke above it, we looked at it as taking a retracement. So we were thinking this was going to be more of a corrective move, because this is the original trend line over here, up here, which didn't get breached until the last few hours of the trading week. Okay, we were already out by then. You don't see on this chart what happened on the 15-minute chart, which was the gap. And this is what happens in gaps when you have this. This is a result of some news that took place on Friday, some very strong news, very strong move. So on this 15-minute candle, the very next minute, suddenly there are no buyers or sellers for quite a while, and then you pick up here, opening at 109.27 after closing 1 minute before that at 108.94. Now, because our stop was around, I believe, the 109.8 or something like that, and it doesn't open until 109.27. So guess what? We get stopped at 109.27, which is the reason why we have those extra few pips of loss or payment that we had to make on the yen that Friday, because we generally, on our yen, our maximum stop loss that we take is roughly around 40, 45. So we took an extra 13, 14 pip hit on that because of the gap. And don't let it frustrate you if something like that happens to you. It's just part of what happens. Now, what we could have done, we could have been more aggressive in looking at this 4-hour chart with this steep trend, and go ahead and we could have made the change to switch up and go long, okay, which would have paid off, or possibly not even have gotten a hit. But yes, we would have, because I'm looking at this low of 108.65, which would have been where the entry to go long would have taken after you saw the breach or the change in, the change in the sentiment on the yen. But nevertheless, we were able to make some changes that Friday with the franc, even though we lost 21 pips. And the reason why is because when we made our change on the franc, it didn't fill for the change in the move, but we stopped out the short, which was in the wrong direction. Uh, got away with just paying 21 pips on that. We also put in a change for the Canadian dollar, but when we put in the change to change up and go from short to long, neither one of them filled. Okay, and we put in to do the same with the Aussie and the Euro, which turned out to be to our advantage. We were able to get the fill in. We stopped out early on the going in the wrong directions. Here we were long. We saw where the change took place to go short, and we were able to get it filled. And same thing with the euro. So that, my friends, is what happens in the market when you see a change in sentiment. Here again, this is the 4-hour chart on the franc, which we didn't get the change in the fill. But here in the euro and the Aussie, we did get the change in the fill here, and we did get the change in the fill here. Mainly because of the change. The reason why we were able to make this one is because our technique in approaching it was a little different than what we did with the franc and the Canadian dollar. With the franc and the Canadian dollar, we were looking for it to retrace, which it never did. And that was the strategy there. And the reason for it was because we were expecting more of a, what's the word for it? Rebound, because of its nature, or what we saw in the chart. When we looked at the euro, knowing what we knew about the sentiment overall of the euro, we knew that it was much weaker. So therefore, we did instead of trying to make limit orders, we put in sell stop orders, so that once it closed below this trend line here, that low, underneath that low, we just stopped out our long and we took our shorts right then, because we knew, we could see that this was a very weak move to the upside that took place here, right here. This is where the downtrend had stopped and looked like it was going long, but there were a lot of things that were not very bullish about this move where it closed above the trend line. One being that the very next candle, even though it broke the high, it was a bear candle. You see the teardrop, the tweezer top here, and it's closing down. Plus, it's at the end of a session, and it continued to kept moving down. So that's bearish, and it broke this parameter here, and it was very strong move to the downside. This is a full body candle going down, so we weren't really expecting to see much of a retracement if it broke this low. On the other hand, looking at the franc was a little different. We still wanted to see some kind of retracement, which we didn't get because the move still had the ability to rebound. And it's same thing here with the Canadian dollar. When it broke over here, this closed above the trend line and broke it, it almost made it back, but it didn't. So let me put in a trend line here to the upside, because that's where we're going now. And we can also take this and move that here to give it a little bit more distance. Also, there was one other thing I want to show you before I let this go, and that's the yen. This is something that I didn't see until we started setting up things. Look, you see this down move? This is something that really could have helped in the trades this week. Once we broke past this barrier, if you put a Fibonacci against that point where it changed, where it broke out, and put it against this high, guess where that, yes, it went exactly to the 382 retracement and took off from there. Now, that in and of itself, if we had put the Fibonacci against it, guess what? We would have had a big advantage, because we would have been able to see what was going on, and that we wouldn't have held out on the short or expected the short to make that move or been looking for it to short and come back down again, because we would have seen that this is a retracement off of 382 and probably would have been bullish against this very strong trend line that was moving to the downside. That is just the nature of human interaction with the market. There will always be, no matter what you do, no matter how uh, precise you are in your analysis, there's always the possibility that at some point or another you forget something or you miss something. And that's okay, because overall, when you weigh it all out and you leverage yourself across the major pairs, if you're following a good method, you're going to come out on top, as we did this week with a 521 pip gain for the week. So that's it for the week. I just hope that you learned a little something from watching, and also watching our mistakes as well. You learn from our mistakes as well as our triumphs. So that's it for the week ending October the 23rd. I'm your Forex University professor at yourforexuniversity.com, and here we go. See you next week.